Hello, everyone, and welcome back to Summit. That a lot of you guys have been very much looking forward to is Christine McCarron. And Christine is a real estate agent in the Boston area. She will be speaking with us today about what steps we need to take to purchase our first home. Christine is also the author of Empower Your Inner Millionaire, a woman's guide to real estate investment. Christine, thank you so much for being here. Please take it away.
Thank you so much, Ruby. And thanks everybody for joining me today. I'm excited that you're excited about buying a house because this is, well, there's all kinds of statistics about how people who own their own home have so much more financial stability, have so much more financial success than people who rent for their lives. So I'm really excited about that. And I want to keep this really interactive because it can be whatever you want it to be. Actually, you can see behind me that I'm doing a little home renovation of my own. That's the consistent status in my life. But and I recommend it for everybody. So I'm going to have a lot of polls. So to let you know how to do the polls, on the side of your screen, you're going to see two buttons. One says event and one says stage. And if you go over to the event tab, you'll see there's the chat where you can put your questions. And right next to that, there should be a button that says polls. So I'm going to make the first poll available now so you can see how that works. And I ask everybody to please vote on, do you think it's cheaper to rent? That's a big discussion that I have with a lot of folks who are renters. It's like, well, I can't afford to buy a house. It's a lot cheaper to rent. So I want to see if you agree with that. And we can have a little conversation about that. And any other questions that you have as we go along, just pop them right into the chat. And the backstage folks like Ruby are going to put those all together. If they think it's appropriate, they can pop in with a question right away. Otherwise, we're going to answer all your questions at the end. Because I want, by the end of this, I want you to be feeling empowered to go out and buy your first home. So 25% of the people are saying it's true that it's cheaper to rent, and 75% of the people say that it's false. So let's just cover that because it's important that we're all somewhat on the same page. The answer is, it depends. It depends on you. It depends on your specific situation, because if you are going to be a homeowner forever and you're going to sort of stay in the same area, I think the breakdown is different by location. But in general, if you're going to stay in the same location for at least 4 years, it's going to be cheaper for you to buy a place. If not, then you might be better off renting, because you can't know what the market is going to be doing when you need to sell. If you need to sell, there are lots of ways so that you wouldn't need to sell. But in general, you have to keep in mind that when you're a homeowner, there are lots of tax advantages. So even though you might be paying a little bit more for your mortgage, you, in the long run, will probably end up in a better place because you will have the appreciation of the property, and we'll talk about that a little bit. And you'll also have some tax advantages while you're owning it. So plus, it's really hard to save while you're also paying rent. So thank you very much for voting. And now that gets into the best thing, the next piece of this, which is this a good time to buy a house? So I really want to hear your feedback on that as well. So we have a new poll. Now is a bad time to buy a house. A lot of people say that to me. Oh, it's this terrible time to buy. The market's so high. It's crazy. We're in a bubble. Da, 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 da. Is that you? Do you believe that? If you do, vote true. And if you don't, then let me know. Let me know your thoughts. Oh, interesting. Interesting. You want your voice to be heard here because you're absolutely defining this event and how it's going to go and what we're going to talk about. So, all right. So it looks like the majority of people think that it's not a bad time to buy a house. And I want to talk about this idea that your home is an asset. We'll leave the polls open, but I should have actually had a poll that says, do you think your home is an asset? A lot of people say, and you hear this all the time, oh, my home is my largest asset. If you're any kind of a fan of Robert Kiyosaki, you know that your home is not actually an asset because it is not making you money. As a matter of fact, it's costing you money every month. Not as much as rent, but also if you need money, are you going to sell your house? No. So it's not truly an asset. it will be someday if you're going to downsize, if you're going to, never need another house, but if you're going to sell that house and just have to go buy another one, the market timing doesn't matter, because if you buy at the top of the market and then you sell at the bottom of the market, yes, you're going to be buying, you're going to sell at a loss, but then you're going to buy your next house, which is going to be at a discount because it's also lost value. So especially if you're like in a starter home and you're going to go up to a bigger home next time, you're going to be saving a percentage because the market's gone down a certain percentage. I don't want to get too heavily into it. I just want to say to you, it's never a bad time to buy a house based on your goals. Okay. So gets into a whole big thing that I think is so incredibly important, that you need to have goals about your house. What do you want your house to do for you? Is this you thinking that you're just going to buy it and, fix it up in a few years, you're going to sell it and buy another one, like do sort of a long-term flip kind of thing? Are you buying a multifamily that you want to become an income stream for you? Are you thinking that you're going to live here for a couple of years and then relocate? So when you start, the very first thing I would like you to do, if you're thinking that you want to buy a house, is sit down and say, what is important about this house? Is this my forever home? Is this my starter home? Is this just, I'm single, I'm going to live here until I need to have, more people living with me, or, you know what I mean? So take some time and really just think through your goals for this house. Not that the house is going to do something for you, but the house is going to, you have some vision that you might not have 100% articulated to yourself. So take some time and do that and figure out your goals and what it exactly you think that, what you want to happen with this house. Okay. All right. So we're going to bring up the next poll, because now we're going to start looking about how much can we afford. So, okay, we've decided now we definitely want to buy a house, and we know it's not an asset, but we want to have one anyway, because we know it's a tax deduction, and we know we're building long-term wealth, and we know that we're not just throwing our money away to a landlord. And so much can we afford? A lot of folks think, well, the bank is just going to tell me, right? I'm going to go there and they're going to pre-approve me for whatever they want me to have. So, okay, let's see. The votes are coming in. The bank. So both of these answers are true, actually. The bank will tell you how much you can afford, but does that mean that that's how much you should be borrowing? While you're doing your goals, you want to say, how much really am I comfortable spending every month on housing? A lot of people, a lot of banks will tell you, oh, just buy the most that you can possibly afford because your income's going to go up and everything's going to be great. Well, okay, maybe, but is that where you really want to be? Like, they call that house poor. So write down your goals. It might be a good, like, kind of guideline would be, you take what you're already paying for rent and maybe half of what you've been saving. So presumably you're saving for a down payment, which we're going to talk about in a minute. And you can still, so you should be able to afford to budget some of that money that you've been saving and put that towards your mortgage. But don't let the bank tell you, oh man, you can afford $5,000-$6,000 a month. Do you really want all that money to be going into your home? Maybe you do. Maybe you make $20,000 a month and that feels perfectly comfortable. But if it feels a little squeaky and it feels uncomfortable, don't go there, because then something unexpected happens, like we have a global pandemic and you're losing your house. And that's not where we want anybody to be right now. So the answer to that part, don't let the bank tell you how much you can afford. You tell the bank how much you feel comfortable with. And it's okay to get approved for more. That doesn't mean you actually have to spend it. And that kind of brings us to the next question. And the next poll is, a lot of folks feel like they can't buy a house because they have already too much debt. The bank isn't going to give me a loan because I have too much debt. And you heard, the last speaker was talking about, well, maybe you should just wait and buy a house with cash. And there's certainly a lot of arguments toward that. But my only kind of thing about that is, all this time that you're trying to save up all your cash to buy a house, all your rent money, if you can live at home and save up money for a house, great. And you can put a big down payment or pay cash. But if you're paying rent, I would like to see that rent, going to you, and you can do things like house hacking and stuff like that. So yes, most folks, the majority of people think, no, I don't have to wait until all my debts are paid off to buy a house. And that is true. banks are totally, there's like a ratio that they use there, that this much of you've got X amount of income and some percentage of that can be used for total debt. And then, so it's just going to mean that the more debt you have, the lower you're going to be able to have a mortgage, the smaller amount they're going to give you for a mortgage. So there are lots of things you can do, tips and tricks about credit. And I just want to let folks know that I have a whole series on my website. It's like a whole blog series called Home Buyer University. And that is basically takes you through all the stuff that we're talking about. So if you're like, oh, credit, debt, or any of these other different topics that we're covering, there's a lot more detail there. And you can just, blog by blog, you can kind of move your way through it as you're actually going through the process. So yeah, you want to make sure there are tricks, I guess, is what I want to say, to what you should pay off so that you can get a higher mortgage, so that you can get things, sorry, so that you look better to the bank is what I want to say. Okay, so now we're at the bank and we're ready to find out about our loan. So I want to know, what are pre-approval and pre-qualification? Are those the same thing? You hear those things thrown around a lot, or you don't, because the option number 3 is what are you talking about? So when you go to your loan officer, and there are different places to get loans. You can just walk into a bank, or you can go to a broker, which is like an insurance broker or a stockbroker. A stockbroker doesn't just sell one kind of stock. They sell all different kind of stocks. And a mortgage broker is the same type of thing. They can't just give you a loan from one entity. They can give you a loan from a whole bunch of different banks and different places where they get money. So you may find, whether you go to a bank, like you just walk into your local TD Bank or something, or whether you work with a mortgage broker who's going to shop the different banks and find you the best deal. In either case, they either will offer, or they may offer both, a pre-approval, especially if you do it online. There is a pre-approval and there's a pre-qualification. A pre-qualification is sort of like a little, it's good to put your foot in the water. They're going to give you a sort of a ballpark idea of what they think you can afford, but it's just going to be based on what you tell them. So if you tell them, you're going to tell them what your expenses are, you're going to tell them what your income is, and they are going to make their decision based on that. When you go to the next level and get pre-approved, they're going to want to see your bank statements. They're going to want to see your tax returns. They're going to verify that you can that everything you said is true, and that you didn't forget about this huge debt that you have, and you didn't forget about some income that you have coming in. So they're going to want to verify everything. And that pre-approval is much stronger when you're going to put offers on homes, when you're actually going to sell, talking to the sellers of homes, or giving your information to somebody whose house you want to buy. The pre-approval is much stronger. And that's what you're really going to want to have, because a lot less can go wrong with the pre-approval. Normally, if you get pre-approved for a certain amount, and in fact, they're going to want to see which house you want to get pre-approved for, because they're going to factor in the taxes, they're going to factor in the other information and stuff like that. So when you get pre-approved for that house, you basically, the only thing at that point can go wrong will be something either that was completely hidden, or something that has to do with the house. Maybe the house, the bank doesn't think it's worth what you want to pay for it, or something like that. So it's much better to get your pre-approval. And that's, like I said, that's much stronger when you're talking to people whose homes you want to buy. Okay, so when you buy a house, you are going to need to have some money, some upfront money. And I want to know what you think. How much do you think you're going to need for a down payment? Jesus. There's a bunch of options. If you scroll down, there's actually 5 choices here. So the bottom one, what? I need a down payment? So, okay, great. So we've got some votes coming in on that. I want to hear your thoughts about that. All right, everybody needs to vote. I want to know. I want to know where everybody's thoughts are, because this is a huge barrier for people when they're looking at buying a house. Is, I just don't have enough money. I just don't have enough money. And in fact, every single one of these options, except the bottom one, which says, what? I need a down payment. Every single one of these options is possible. You can buy a house with 3% down. You can buy a house with 20% down, but the minimum that you need is 3%. And that's a lot less. So if you were looking at a house that's $300,000, you only need $9,000 for your down payment, as opposed to if you thought you needed 20%, obviously, then you're going to need 60,000. Really big difference. So you might already be in a situation where you could buy a house, and that would be really awesome. So one thing that we're going to talk a little bit more about, but for a 3%, the 3% down payment, that's a specific type of loan, an FHA loan that's offered by the government. And there are certain restrictions and requirements that go along with that. If you can get up to at least 3.5%, that is a more conventional loan. And the other thing I want to talk a little bit about before we go too much further is places where you can be involved in programs that are specifically for first-time home buyers. Most major cities, many towns, many neighborhoods offer first-time homebuyer programs, and they often do that in correlation with a bank or with a lender who will offer you a special rate, there can be grant money available sometimes. There can be, they might make a special interest rate that's lower because you're a first-time buyer and they're trying to encourage people to buy homes. So Google your town, or the nearest big-ish town that's near you, and just say first-time home buyer programs and see what you can find. Because sometimes, like in Boston, I'm near Boston, Boston will require that you take a class. So you take a class that educates you about the different aspects of home ownership. And then after that, you can get a rate that is at least 0.5% and maybe more lower than what you'll see for what everybody else is looking at. So absolutely take advantage of your first-time home buyer status and see what you can get. Take advantage. Okay, so now we know what we need for our down payment. Now, where can that down payment come from? This is a place where people can get really hung up. So I want to hear your thoughts about this. You might have thought that you only could use your own money for a down payment, but in fact, you can use other people's money sometimes. For the big thing is, and this is a really important thing to know, is that the bank, they don't just want to know where it came from. By law, they need to know where it came from. And the whole home buyer thing, the whole mortgage thing can be such a pain in the butt because the bank legally has to source every single deposit and withdrawal that's over $1,000. So if you think that in the next couple of months that you are going to want to buy a house, the best thing you can do for yourself is to take the money that you are going to use for your down payment and put it in the bank right now. So if it's under your mattress, if your parents are giving it to you, if your friends are giving it to you, if you're selling something, absolutely put it in the bank today. Because when you go for your loan, they're going to ask you for the previous 2 months of bank statements. And if the money appeared on one of those bank statements, then it becomes a big deal. So let's say your parents say, oh, when you get ready to buy a house, let us know. We want to give you $10,000. Oh, that's great. So you're getting ready. You're all ready to go. It's 2 weeks before the closing, and you take that $10,000 from your parents and you put it in the bank, and the bank goes, whoa, hold on. Because there are all these rules about money laundering. So they're going to need to know, where did it come from? And you say, oh, my parents gave it to me. Okay, now your parents have to write a letter. And then, okay, they write the letter. And the bank says, okay, now we need to see where your parents got it from. Now your parents' bank statements are being brought out. If the money's already in there 2 months ago, so that the oldest bank statement you give to them already has any money that you need to use, no drama. No problem. They do not care where it came from if it was there 2 months ago. So I know a lot of folks, especially people who weren't born in the United States, people who are from countries where they don't trust the banking system, they like to keep money under the mattress. They like to keep the money someplace else. And that causes huge problems when it comes to buying a house. All right. So you can get it anywhere as long as it's there at least 2 months ago. If you're going to get it from your savings, it's okay. And that's great. As long as, you're just showing everything around, showing everything ahead of time. Okay. So good job voting on that one. I really appreciate your feedback because it helps me to see, if there's something that where there are a lot of misconceptions, and I can really focus on that. And I appreciate you being part of the conversation. Okay, so one of the big things about when you get ready to buy your house, and this makes, your credit score, if you don't have a good handle on your credit score, then I beg you to please find out what you can, what your credit score is. Start today trying to, if there's anything weird on there, I ran my credit one time and there was this bill on there from Sprint, and I had never even had an account with Sprint. So it takes time to deal with the credit bureau to get that, erroneous stuff off your credit report. Even some things are real and you're like, oh, wow, I didn't realize that when I moved, I forgot to pay the last $10 of my electric bill. That kind of stuff, it's so easy to fix. But when the credit bureau is looking at that, they just see, oh, this person didn't pay this bill for 2 months or 2 years or whatever. That hurts your credit, even though it might only be a few dollars or a few cents. Doesn't matter. It's still a late bill. So easy to fix that kind of stuff. Just please take some time and get those kinds of things off your credit. And now let's talk about what the minimum credit score is for you to buy a house. Believe it or not, all of these numbers are possible. You can actually buy a house. Again, this is an FHA loan, a government-backed loan, with a 500 credit score. Now, for that one, you do need to have 10% down. But even if your credit is not that great, you can be a homeowner. That's what I want you to know. You can be a homeowner. So 500, 10% down. 580, an FHA loan with as little as 3% down. 620, conventional loan, 3.5% down. And then of course, the higher your credit score, the less you're going to need to pay. And I'm, normally, and what I mean by that is interest rate correlates with your credit score. So the better your credit score, normally the better rate you can get, the lower interest rate you can get. So please don't let credit score, well, two things. First, please address your credit score. Please find out what it is. You can go to I think it's free credit score. Oh, go on my website, which is bostonreguru.com, and you'll find the credit score blog, and it tells you what the right website is for your once a year free credit report. And there's one official place where you can go and get that. And then look at everything, check it out, make sure that you're make sure that you've got everything fixed, that everything that's on your report is accurate, and then get rid of anything you can get rid of. Because like I said, it can take up to 3 months for some of that bad stuff to come off. And then get yourself to a place where you're in a good place to buy your house. And that also makes a difference for other stuff, like normally your car insurance is cheaper if you have better credit. So things like that, things you might not have any idea, that you might not even suspect, are going to help you. And I love to have a whole conversation with people about having good credit, because it's a life changer. Okay, so you've got your down payment all set. You know where you're going to get your money. You've got a good credit score, so you know how you're going to get that. You know that you're going to be able to get your loan. Now, when you get ready, people think, all right, so I'm not going to tell you the answer. I'm going to let you vote. How much do you think you should budget for closing costs? And closing costs are what you're going to need to bring to the closing, which is when you actually buy the house. What are you going to need to bring in addition to whatever the rest of your down payment is? So let's see. Let's have everybody vote on that one. because this is very, very, this comes as a real surprise for some people. So in this scenario, we're buying a $300,000 house. How much do you think you're going to need to bring to the table to pay, the attorneys, right? The attorney, there's always attorneys involved, or at least a title company involved in your purchase. There are going to be some taxes that have to get prepaid, things like that. So how much do you think on average that you're going to need to bring? Okay, so I can tell you right now that a lot of the votes are low. In general, depending on where you're living, where you're buying, tax rates and that kind of stuff, for a $300,000 house, for any house, you're going to need between 0.5% of the purchase price, which would be like $6,000, right? 0.5%, like $6,000, all the way up to like 2%, which would be like 12, wait a minute, is that enough? Yeah, like $12,000. It could be as high as like $12,000. So what is that, like 4%? My math hat is not on today. So yeah, that can be a real surprise to people. So you want to know, and they have to tell you, get this, they have to tell you at least 3 days in advance. So you're going to buy the house in 3 days and they're like, oh, okay, here you go. You're going to need to bring an extra $12,000 to the closing. You're like, sorry, what? Make sure when you very first talk to the bank, say, listen, I need to know right now my estimated closing costs, and just ask them to break them down for you, because they should definitely know at least a very good kind of ballpark idea of what you're going to need to budget for that. So don't get taken by surprise. The very first house that I bought, I was taken by surprise, and it was not pretty. I was running around, and then of course the same thing. They want to know where you're going to get the money. Like, well, they still have to source that same money, and you're like, I just like borrowed it from everybody I know. What do you mean? Things can get messy. Okay, so now you've got your pre-approval. You know how much money you're going to need roughly. Now it's time to start actually looking for the house. So I want to know, what do you think? A lot of folks think it's better to buy a fixer-upper. What do you think? Go to the polls and let me know what you think. Have you had this idea that you are going to save tons of money if you buy a fixer-upper, that you are going to be able to, that's all you're going to be able to afford? I can only afford like a house that needs lots of work. I want to see some other people checking in on this, because I'm very interested. I hear a lot of people, some people are like, I only want to buy a house if the only thing I have to do is to walk in, hang up my clothes in the closet and go home, and then that's it. Then it's mine. And other folks are thinking, oh man, I'm better off to buy a fixer-upper, and I'm going to add some equity. So like a lot of the questions that I've asked you today, both answers are true potentially for you. And this kind of goes back to your goals. Like, do you have any ability? Have you ever fixed up a house before? Do you already work in the trades? Do you have family who works in the trades? Do you have folks who know what they're doing when it comes to fixing up a home? And if you do, then yes, you sometimes can add some value. You can absolutely get a better deal. But then it also comes into how much time do you have? Do you actually have time to be working on this place? Do you want to be able to come home every night? Do you want to have to come home every night and start working on things? Do you want to have, like I have, bifold doors leaning against my kitchen? Do you want to live that kind of a life? And that also talks to your situation. Is it just you? Are you just starting out? You're a single person. You got lots of energy, lots of ambition. I'm going to go to Home Depot every day and take all the classes they have, which I think will come back after the pandemic, and learn how to do everything in my house. And that's a really awesome goal of mine. And I don't want to have a life, and I don't want to be able to do anything except work on my house for the next year, right? I'm going to hit it hard, and I'm going to really add some real value. Or do you have a family? Do you have kids? Are you planning to have kids in the next few years, where you're going to be like, oh man, I can't, I don't want to do dishes in my bathtub because my kitchen is ripped apart, So take your temperature on that. And I can tell you, you do not have to buy a fixer-upper. And if you don't have the ability and you don't have the time, then you're probably going to end up either living in a crappy situation forever, or you're going to not make money. I know a lot of folks in the trades, and they spend a lot of their time undoing and redoing something that a well-intentioned homeowner thought that they could do themselves. And then it's costing you twice as much as it would have in the first place. So don't limit yourself and think that you have to just buy a fixer-upper, because you probably don't. But then again, if you are handy and then maybe it's a great idea. Maybe it's a great idea for you. So I want to say that I love first-time home buyers. I absolutely adore working with folks. That's why I created the Homebuyer University series on my blog. And if you have any questions at all, I absolutely want to talk to you, because it's great. Being a homeowner is a wonderful thing. So now I want to ask you, do you believe that your perfect house is out there somewhere? Is there a euphoric, beautiful, magnificent, perfect house that ticks all the boxes for you, and if you just look long enough and hard enough, that you'll be able to find it? So everybody believes it's true, which is fantastic. The only thing I want to say is that, what if there isn't? What if it becomes perfect? This is what I want to say. It becomes perfect when you bring yourself into it, when you put your stuff up, when you paint it, when you do all the things that you're going to do to make it your own. That's when it becomes a perfect house. But before that, you might limit yourself. You might say, oh, this house has every single thing I want, but, I don't like, I actually had this happen to me. I was working with a young couple, and the guy, every house we went into, oh, I don't like the color of this paint. I don't like this. I don't like that. And, needless to say, they ended up breaking up. But if there's a little bit, we really wanted a second bathroom. Okay, well, let's see if this could be the perfect house where there actually is a place for you to add a second bathroom. Well, we really needed to have, a family room, because in 5 years we're going to have a family. Okay, is it possible to build a family room in the next 5 years? Could you finish the basement? Could you do something that's going to be a little bit, DIY, right? It's something that you did yourself to make it the perfect home. Because I hate to see folks looking for years and years and years and never, feeling very unhappy and unsatisfied, because they couldn't find the ideal home for them. Just be open to finding an almost perfect home. All right. So now this is your last question of the day, because I want to see, I should have asked this at the beginning and at the end. Do you feel, based on what we've talked about so far, do you feel that you can buy a house, that you can be a homeowner? Yay! I see, so far it's true. I hope it's true. I hope everybody believes that and feels that way, because you absolutely can. You absolutely can. You can take your 500 credit score and you're 3% down, or actually your 580 credit score and you're 3% down, and you can go and you can buy a house and you can be a homeowner and you can live the American dream, and you can start, doing home renovations, having lots of fun. So what are your next steps? The next steps for you, I talked about this a little bit, I alluded to it a little bit, is setting some goals for yourself. Sit down and say, okay, this is how much we need to have. This is what our credit score needs to be. So we're going to go ahead and start working on our credit score. This is how much I'm comfortable with paying out of my pocket every month for my housing expenses. And I can still pay everything else I need to pay. Here's some small bills I can get rid of so that I can raise my credit score in the next couple of months. And then you want to define your budget, which, is partly your goals, but also, when you are living in a house, there are some things you might not expect. So you're going to want to have an account an unexpected things account, so that when your hot water heater, like they were talking about yesterday, what happens when your hot water heater breaks down? You want to be able to make sure that you're not taking every single cent you make and putting it on your mortgage. You got to put aside some money. So when you create your budget and you say, how much can I afford each month for my mortgage? Make sure that you're also saying, and here's what I'm going to be for my taxes, and here's what's going to be for my water bill and my blah, 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 whatever other things, and my little emergency fund. Don't make yourself house poor. getting a grip on your credit. I mentioned that before a couple of times, but it's vital. And even if you never buy a house, having great credit will serve you so well. Look for first-time homebuyer programs. Like I said, you can just Google them, put your town or the next biggest town in there and say first-time homebuyer programs, and you might be surprised at how many great options there are. They're still doing them virtually in most places, so you can probably get that and see what kind of great incentives and what kind of great potential grants or interest rates or anything that you can get. And sometimes too, they're trying to encourage people to move into specific neighborhoods and fix things up or things like that. So you can also look for neighborhood grants, because sometimes you can get, they'll help you with your down payment, for example. And if you stay there for 5 years, they forgive that money and you never have to pay it back. So different kinds of programs, be open to that. There's some really great stuff out there. When you are getting ready to, when you're looking at rates and stuff like that, as far as like, where am I going to get the best rates? You can, it's very difficult. I have some friends who are loan officers, and they're like, people just, they're shopping rates. They're calling everybody and they're saying, oh, what can you give me for an interest rate? But it's so specific, based on the house, based on the taxes, based on the, your credit, based on so many different factors that you're really just getting a ballpark from everyone. So I encourage you to find a lender, find a person, whether it be a mortgage lender in a bank or whether it's a broker at a brokerage company. Find someone who you feel good about, who you like working with. And you can actually, not too many people know this, but you can use one against the other. For example, if you call up Bank of America and they say, oh, we're going to give you a rate of 3.5%. And you call Wells Fargo and they say, oh, we'll give you 3.6. And you say, well, you know what? Bank of America just offered me 3.5. And they're like, oh, well, then we'll give you 3.5. Literally, you don't realize you can do this, but you can absolutely shop interest rates. So find somebody you like working with and then see if they'll match the rate that you were able to get from somebody who maybe you didn't like so much. All righty. And then once you get all this stuff in place, all of like the hard things, all the paperwork and all the readiness factor, and you've got your pre-approval letter in hand and you know how much you can afford, now it's time to start cyber stalking your dream home. So you're going to look online. What I encourage people, it's so easy just to buy a house where you've always lived, where you're renting now, where you're working, whatever. But there could be neighborhoods that you haven't even, aren't even really that familiar with. So I would say each weekend, spend a weekend in a different town, like go there for breakfast, wander around, see what's open for cafes. And, it's a little harder now, but, you might be surprised at what you find in these other neighborhoods that maybe are a little bit cheaper. And you can get some great deals and find a great new, fun, emerging community with lots of other first-time home buyers that are living the same great life that you're living. So yeah, cyber stalk and then visit the neighborhoods. You're going to want to have a real estate agent who is on your team, who's on your side, who maybe specializes or at least likes working with first-time home buyers, because it is a little bit different for us real estate agents. I'm a real estate agent, and it's a little bit different. When it's a first-time buyer, they might need a little more hand-holding, and I love that, but not everybody does. So same thing, find somebody who you really love working with. The real estate agent is paid by the seller. The seller's agent, actually the seller pays their real estate agent. And then that person shares that money with the person who's helping the buyer. So you want a person who's going to be your buyer's agent. They're only working for you, even though they get, shared by the seller's agent. So find somebody you like. None of them are going to cost you anything, although there are some people now who you can pay. But most of us, we work only when we're successful. There aren't too many businesses, aren't too many professionals who only work when they succeed. Like, imagine if you were like a football player and you only got paid when you won. Wow, wouldn't we have some different stuff going on? So that's the way real estate agents are. We only get paid when we succeed. So we want to succeed, but you don't want somebody who's going to pressure you either. So find somebody you like. And my last piece of advice is just do it. Do it. You can do it. I absolutely know you can do it. And I hope that you feel that way too. Are there any questions? Wait for it. There's Ruby. Hello.
Yes, there are many, many questions.
Oh, good.
So
Excellent.
we have about 15 minutes. So I want to jump into the first one right away, just so that we can make sure we get to all of them before our time runs out. So our first question is from the chat. It's from Cindy.
Cindy
asks, do you need to have the down payment money in your bank account, checking or savings, or any type of account? What if it's an investment taxable account, not in a bank? Do you still need to transfer this money to the bank with low interest as soon as possible?
As long as the bank can see where it was and it was there already, then it's okay. You can just make sure when they ask you for your statements, just include that statement. So if you have money that's in any bank, it's totally fine. You can leave it in your high yield account. You can leave it in your, whatever, even in your stock portfolio. That's fine. Although obviously you want to make sure it's going to still be there when you need it. But as long as you include that paperwork when you give your stuff to the bank so that they can see where it came from, then you should be fine.
Awesome. Okay, the next question comes from Alexander S. And he asks, how accurate are the free monthly credit reports that are sent to me by my credit card company? Does it hurt your credit to have it pulled so many times?
So the free stuff that's coming to you from your credit card company, that's not a hard pull. That doesn't count. But for example, I recently worked with, my boyfriend has some investment property. He had somebody come in and apply for a loan, for an apartment. And they literally, she had like 12 or 13 different stores that she'd gone into to try to get credit. Don't do that. Wow. Okay. If you think that you want to buy a house, stop applying for, I can save $25 at Home Depot if I get a credit card. Don't go there. Don't do that, because that does hurt you. And if you're applying for apartments, you're getting a car, you got to kind of put the kibosh on all that stuff, at least as soon as you can. Like if you think you want to buy, please right away, stop applying for credit. And as far as how accurate they are, most banks use your FICO score. Not all of them. A lot of them have their own methodology that they use. So don't be surprised if you say, oh, look, I've got a 650 score. And then you go into the bank and they say, oh, no, sorry, you've only got 620, because they're using different criteria. It's the same information, but they weigh things differently. They might think that one thing is more important than the FICO people do. So in general, yes, it hurts your score. You definitely, if you can not have more than, and that's another reason why you don't want to get a bunch of pre-approvals. You can get pre-quals just by you tell them what your credit is. But anything you want, anything you're doing, make sure you want to ask them. Like I locked my credit on TransUnion. I just went on there and I locked it because I don't want anybody pulling it without my permission. And then if I do want to apply for something, I have to unlock it. So I would even say do that, because the more than 3 hard pulls, it does start to, erode at your credit score. And, there's no reason for it. You want to, don't go there. Don't go there.
Awesome. Okay. So I hope that answered your question. The next one is going to be from Mary C. And Mary asks, what are the potential pitfalls and red flags to look out for when looking for our first home?
You mean when actually within the house, Mary? Is that like when you're walking through the house itself?
I'll clarify with her on Twitter in a second, but I'm pretty sure that's what she
meant. It's so easy to walk into a house and look at the furniture and look at the beautiful, the way they've got it decorated and the paintings, and it's so pretty, and look at the flowers and stuff like that. And that's totally normal, but that's not what you want to look at. A lot of people forget to look up, and they don't want to go to the basement. Oh, I don't want to go in the icky basement. The first place to go is the icky basement. Go in the icky basement and move the cobwebs out of the way and look up and around and see, if you see evidence of water, if it smells bad, like it's moldy, you might have water down there. Water is one of the worst things that can happen to a house. If you've got a leak somewhere, it can be so hard to find it. You don't want to go there. And also, when you're looking up, if you see things that look like holes or rotting, there's mold, mildew. That's another really bad thing for a house. Asbestos. We get a lot of that up here in the Northeast, which looks like, what asbestos, I want to qualify. I'm not trying to tell you how to diagnose asbestos, but if you see something that looks almost like a plaster bandage that's around the pipes or something, it's possible it could be asbestos. So you might just want to ask. Those things should be disclosed by the seller. Maybe the seller doesn't know, maybe they just aren't very nice. I guess one thing that I'm always looking at is evidence that the people who are selling the house are being honest with me. So if there's something that's clearly wrong and they haven't disclosed it, that might be like a little red flag to say, gee, it looks like, the roof is sagging, but they say that it's a brand new roof. Well, that's kind of weird, So yeah, you just want to, basements, attics, and then ceilings, looking for water damage, looking for anything that looks like it could be mold or, smelling stuff and see how that is. Don't be afraid to open stuff, open the cabinets, open the drawers, open the closets, and just look around. Here, again, in the Northeast, we have a lot of really old houses. So all kinds of stuff can go wrong, but you can kind of tell. Actually, I saw a house with someone, like I think it was last year, where the foundation was here and the house was like here, where the house was literally like sliding off the foundation. So walk around the outside, walk around the back, and just try to like make sure that things are kind of straight, that there aren't, and again, no signs of water, things like that. It's hard, when you're first looking at a place, but the main thing is not to be seduced by the decorating, by the excellent decorating skills of the seller. and vice versa. It could actually be a place that they did a crappy job decorating, or they're hoarders, or they're messy. But if you look at the bones, you say, this is really actually a great house. It's just got an ugly outfit,
Yeah. Awesome. Thank you. Thank you, Mary C, for that question. The next question comes from Maria O, and this is from the chat. She asks, are there any exceptions for the 2-year employment proof due to COVID unemployment?
So 2 years is only if you're self-employed. Normally you have to have had 2 years worth of 2 years worth of tax returns if you're self-employed, because they don't trust self-employed people or whatever. They don't feel that's not a warm fuzzy. They don't have a warm fuzzy with us self-employed people. So they want to see that you've done your thing for at least a couple of years. But if you have a W-2 job, it's really only 60 days. So yeah, don't worry about that. Absolutely.
Wow.
Yep.
Okay.
Yeah, because they want to see that, there's a pretty good chance that you are going to be still employed when they give you the house.
Awesome. Thank you so much for that. That's something new. I didn't know that. I thought it had to be 2 years. So that's fantastic. The next question comes from Bridget M, and she asks, how important is a home inspection?
It's up here again. I'm using my experience with the Northeast, but I think it's very similar in a lot of places. There are some really competitive situations. So you're pitted against other buyers. Everybody's trying to get the house at the same time. And there can be a tendency or what do I want to say? You might feel that it's a good idea to waive your home inspection. And sometimes it's the only way you're going to get the house, quite frankly. I've been on the seller side where the sellers are looking at 10 different offers, and they don't want the drama of having some silly little thing come up at the home inspection. And to be fair, there's only so much that a home inspection can show you. They don't open the walls. They can't tell you that you might not have a problem with your plumbing, 2 days after you buy the house. But there is a lot that they can tell you. And a lot of the things that we talked about before, is there a problem? What does the roof look like? What does the basement look like? Do they think there's water anywhere? Is there mold? Is there potential insect damage? They're usually looking around for any kind of insect damage, like, termites and stuff like that. So if you can, absolutely, it's a great idea to get a home inspection. If you think that you're going to be in a situation where it's too competitive and you won't be able to get one, see if you can get a builder or a home inspector to just walk through the house with you at an open house, or, ask for a second showing and have that person walk through with you, just so that you can have a second pair of eyes. Again, they're not going to rip the walls open and tell you that oh, look at this, we've got, but they definitely can give you some things to look at and to be aware of. So.
Awesome. The next question comes from Twitter. Jessica Q asks, What are the benefits or drawbacks of purchasing a foreclosed property as your first home?
So I've done this myself. I've bought foreclosed properties, and the major problem is that, imagine you're buying a house from someone who couldn't pay their mortgage. So there are probably a lot of other things that they weren't able to keep up, right? That you could definitely find some maintenance issues. You could definitely find some things missing. Like one of the houses that I bought, the person who sold it, they actually, they left it, the bank sold it, but before the person left, they actually took all the kitchen cabinets with them. Because they were just like, people just get angry too. They're like, oh, screw the bank, They're not thinking about screwing the next person who's going to buy the house. They're just like, hey, you're going to kick me out of my house? I'm taking all the cabinets. I'm taking the copper. I've had people, the copper is stolen, a lot of times that they've been empty. So the up here, again, in the cold places, the bank will winterize the house. But if the people moved out during the winter, there could be cracked pipes. You could have weather related problems. So just then you absolutely want to get a home inspection. You absolutely want to have probably a contractor walk through the house with you and just make sure that you understand what you're getting involved in. So if you're handy, if you've got relatives, friends who are going to help you work on the house, great. Because you're probably going to need something done to it, even if it looks good from the outside.
Okay, that's great. Thank you. We have time for one more question. And this question comes from Michael D. And he asks, how can we make sure that our real estate agent is trustworthy as first-time homebuyers?
Yeah, real estate agents, and I don't know if everybody knows this, real estate agents have a fiduciary responsibility to their clients. We are not supposed to do anything that's good for us and not good for you. Everything, it's you first, and even if it's not good for us. So like if we go see a house together and I tell you, you say, oh, I don't know if I should get this house. And I'm looking, oh, look at this. They're paying 3% commission. I'm going to go ahead and I really want this person to buy this house because I'm going to get lots more money than this other house they like that only paying 2% commission. Yeah, that's like, you can take me to court for that. Okay. That is like not cool, but that doesn't mean it doesn't happen. And it might even be like, they might not realize it. Like, oh, gee, I wonder why I like this house so much better than the other house. Yeah, well, so research, get referrals, and trust your instincts. Those are the three, things you want to know. Do I like them? This is a long road together. You're going to be minimum 3 months working with this person. So make sure you like them and make sure that in your gut, you feel like you can trust them. And then, like I said, you want to make sure they have the knowledge to bring you to the, to help you, all the bridging the gaps of all the things that you might not know. And then, ask your friends, look online, whatever, and try to get some good referrals, some good reviews and stuff like that. But at the end of the day, I think it's your gut. You got to just trust your gut.
Awesome. So if there's one final piece of advice that you'd like to leave everyone with today, just one thing to take away from this amazing talk we've had, this has been great, honestly. But if there was one thing, what would that be?
You can do it. You can absolutely do it.
Awesome. Well, there you go. There you have it, ladies and gentlemen. You can do it. Thank you so much, Christine. Once again, guys,
everybody for watching and listening. It was great. I hope you find it helpful.
So I've added her website to the chat, bostonreguru.com, and her Instagram at bostonreguru1. And you can connect with Christine there if you have any further questions, or if you want to talk to her, or if you want to take that course for first-time homebuyers on her website, which I will definitely be doing. Thank you so much again, Christine. You have a wonderful day. And guys, we'll see you at 1 o'clock for our next speaker.
Thank you.